Hi, this is Paul Graywall, Chief Legal Officer at Coinbase. You're watching Taking Stock.
Counting down to the close, everyone. It is Thursday, October 2nd. This is Taking Stock, and I'm Kristen Scholler, live down here on the floor of the New York Stock Exchange. We got stocks set to close fractionally higher in today's session. Does come as the government remains shut down. And we did hear from Treasury Secretary Scott Bessent earlier today on CNBC saying that GDP growth may be impacted as a result of the shutdown. Well, the September jobs report is due out on Friday. That is not set to be released amid the shutdown, and bettors are anticipating that all but cements future rate cuts by the Federal Reserve. A lot of action is always happening down here on the floor of the stock exchange today. OpenAI in focus, that company securing a $500 billion valuation after its recent news, of course, a secondary sale at $6.6 billion. And today on Taking Stock, we're going to catch up with Katy Perry of StockTwits, Kristen Smith of the Solana Policy Institute, and we've got interviews with Better CEO Vishal Garg and Interplant CEO Shelly Aronoff, plus more from Money 2020 and Scarlett Sieber with Better. A lot of action down here on the floor of the stock exchange per usual. We can take a look at that closing bell podium soon. Phoenix Energy doing the honors today. Let's take a look up at the podium. Phoenix Energy bringing the heat, pun intended, here at the New York Stock Exchange. That was the closing bell, everyone. Welcome to Taking Stock for our viewers just tuning in. I'm Kristen Scholler, live down here on the floor of the New York Stock Exchange, and let's take a look at how the markets closed today in a tale of the tape. The S&P 500, you see it on your screen, up just about 0.1%. Investors seemingly complacent amid this government shutdown. My next guest will talk to me more about that here in a moment. The Dow Jones Industrial Average higher by 0.2%. We are still in record territory. The NYSE Composite down about 0.2%. And the Russell 2000, folks, that one up 0.7%. So showing some resilience in those small caps. We like to see it. Small caps, Russell 2000 recently touching an all-time high for the first time since 2021, believe it or not. All right, joining me now with more on these markets, as promised, is Katy Perry. She's a co-host of the Daily Rip Live on StockTwits. Katy, hi, it's great to have you here at the Stock Exchange. Great to see you as well.
So excited to be here with you.
Let's make sense of this market. We did see a higher close for the S&P. Why are traders complacent amid the shutdown?
It's very interesting to see the resiliency of retail investors. I think they're viewing, especially in the shutdown context, they think it's political theater. Been through a lot this year already. We're in the community, in the chat, kind of shrugging it off, even though there are very real-world applications with what's happening in DC.
Okay, so we know that the jobs report not set to come out on Friday. We did get ADP earlier, but that non-farm payrolls report amid the shutdown not to be released. How has the betting market changed in terms of the Fed's future rate cuts amid this?
Yeah, I think it obviously adds a degree of uncertainty. We have some data coming in. Of course, the ADP data is in. That didn't really shock anybody where it was at, although we did get that revision to the downside from August. That was not good news, and we lost 32,000 private jobs in this report as well. So I think the jobs market, the jobs numbers are what people are looking at, and they're also looking ahead to earnings.
Any other economic data points that you're watching?
Yeah, I think a big one for investors right now is the state of sort of, again, what's happening in DC. They're not stressed about it, but they're trying to keep an eye on that. Also the AI trade, in the context of the trading markets, it continues to dominate. We see the quantum stocks, semiconductors, anything tangentially related to AI is catching a bid, and they're continuing to watch and see where that's going to go next.
Yeah, for our viewers tuning in at the very top of the show, they learned about this $500 billion valuation of OpenAI. That is massive, to say the least. What do we know about this company and what it means for investors?
Yeah, this was interesting. You know, they needed to let some of their employees get some money off the table because recruiting in AI is crazy right now. So they did that, and it's interesting that OpenAI at $500 billion is now worth the same amount one is Elon Musk. He just became the first person worth 500 billion today.
Yeah, pretty impressive. Of course, Elon Musk has his own ties to artificial intelligence as well. We've been watching shares of Tesla too. You talked about the ADP jobs report. How should viewers consider that, knowing that it isn't the same necessarily as the non-farm payrolls report that we will not be getting on Friday?
Yeah, I think what you're hearing from analysts is people aren't happy not to have the government data, but they're going to make do with what they have. I think we need to wait and see what's going to happen. Not a lot of optimism from the people I talk to that this is going to get resolved anytime soon, though.
Can Taylor Swift revive the economy? She's got an album drop tomorrow, Katie.
I think she is the economic stimulus. Look out for AMC, Spotify, Target, all those collabs. I'll be streaming, of course, at midnight.
That's right. That's a big one indeed. The countdown is on NYSE-listed Spotify platform. Katy Perry, thank you so much for joining me here on the floor. Great to see you. All right, everyone. Well, speaking of Taylor Swift, let's take a swift little stroll down our walkway here on the floor of the New York Stock Exchange and talk some stocks that are on the move. This is our usual segment. We take a look at notables, companies that are seeing big action in their shares. Today I'm going to show you two of them here on the screen eventually, and they're actually up pretty significantly. FICO is one of them. That stock's seen a double-digit pop today. Health insurers seen pretty decent gains as well. My cameraman Steve is doing acrobats right now here with this little walk. So let's take a look here at FICO. That stock ending higher by 18%. FICO is the ticker symbol. This company in the news today, it's Fair Isaac is the name of the company, but it's the creator of the FICO score. And it unveiled a new pricing model that's going to let mortgage lenders bypass credit bureaus for credit scores. Montana-based company, data analytics firm, said it's going to license its credit scores directly to mortgage resellers who can then distribute FICO scores directly to borrowers. FICO score is the U.S. credit scoring system used by nearly 90% of lenders to evaluate a borrower's credit risk. We can move on over to Humana as well. That stock's seen a decent pop by the tune of about 4%. We had seen these shares on the rise because today it said that it has about 20% of its members currently enrolled in Medicare Advantage plans, rated 4 stars and above for 2026 based on preliminary data. Shares of that health insurer rising into the close. And these preliminary star ratings, this data actually was inadvertently accessible on the Centers for Medicare and Medicaid Services Plan Finder for a period of time on Wednesday. Humana had said in a regulatory filing. That did impact the stock, but in this case it impacted the stock to the upside. So something for investors to consider. All right, everyone. Well, we got a lot more on tap. We can talk Taylor Swift all show long, but we want to save some of that specialness for tomorrow, in fact, because yesterday our own Ashley Mastronardi caught up with Better CEO Vishal Garg. Let's take a look at that interview.
Imagine getting a home loan in an instant. Better.com is an AI-powered platform that helps people do just that, and it recently announced the launch of its bank statement home equity line of credit, or HELOC. Joining us now to share more is Better.com's CEO Vishal Garg. Vishal, welcome to Taking Stock.
Oh, thank you for having me, Ashley. Super excited to talk about what we're doing for all the small business owners in America.
So before we get into the exciting HELOC news, can you tell us what service is Better.com providing?
Better makes home finance cheaper, faster, and easier for all Americans. So we provide mortgages, purchase mortgages, refinance mortgages, and our fastest growing product now is home equity. And we provide home equity lines of credit and home equity loans.
All right. And what is the HELOC and who is it designed for?
The HELOC traditionally is designed for anyone who has equity in their home. So Americans are sitting on over $30 trillion of home equity and over $18 trillion of debt. So what you need to do as a homeowner is really take all these credit cards that you're paying 36% on, all these personal loans, auto loans and things that you're paying 10, 12, 14% interest rate on, and consolidate them and take out a home equity line of credit, and you can get your monthly payments down. An average customer on Better.com who's getting a home equity line of credit to consolidate that is saving $1,100 a month. And that's for like 30 years. So that's just a lot of money that homeowners can save by consolidating their debts with a home equity line of credit.
And why are self-employed Americans the ideal candidate for this type of loan?
Well, usually small business owners are putting any of their cash flow troubles on their credit cards. And yet they're sitting on trillions of dollars of home equity. Traditionally, those loans have been harder to underwrite. So it's much easier for a bank to underwrite a person with a steady salary or a W-2 job. And it's always been really, really hard for them to underwrite somebody who's a small business owner or a gig economy worker or independent contractor. What our AI has now done is made the process of applying for a loan for home equity as simple as if you were a W-2 employee. So you basically permission us and we'll get, just using your bank statements, we'll compute your estimated income and then use that to approve you for a home equity line of credit. And that's revolutionary in the market. It's enabled by our AI, and you can still get the same benefits and process that we do for all of our other products. Get approved in 3 minutes, get everything done, lock your rate in 15 minutes, and have money in your pocket in 7 days.
All right. And if I was a customer, a Better.com customer, and I was using your platform, can you take me through the process and what the AI is actually automating and doing for the customer?
Sure. So the process is you just give us a few pieces of data about yourself, your name, address, social security number, and then we'll automatically go get your mortgage data. We'll get who has your first mortgage. We'll figure out how much credit card debt you have. You figure out how much auto loan debt you have. We'll figure out what you're paying per month on it and what the interest rates are. And what we'll do is we'll take all the stuff that's expensive debt that you have and suggest a consolidation plan for you to consolidate that into a home equity or a cash out refi. And the AI does all of that for you, matches it with like 45 different investors on our platform that underwrite these and fund these loans, and effectively then take you through the entire process. You just upload a few pieces of information and you sign remotely, and we pay off the debts on your behalf, and whatever money is left over, we send to you.
All right, Bashal Garg, the CEO of Better.com, thank you so much for joining us.
Thank you for having me. Yeah, great.
Welcome back, everyone, to Taking Stock. Time now for a few fintech, crypto, and AI headlines here at the FinTech studio on the floor of the NYSE. First up, the crypto majors rallying despite a government shutdown, all up by a percentage point or more. Similar action in the stock market today. Plus, OpenAI has hit a $500 billion valuation after a secondary share sale, surpassing SpaceX as now the world's most valuable startup and getting the same net worth essentially as Elon Musk. He too is a $500 billion net worth today. Finally, global chip makers adding more than $200 billion in market value as the AI frenzy drives tech stocks to new record highs. We are in record high territory across the board. And with that, I do want to welcome my next guest. I'm joined now by Kristen Smith, president of Solana Policy Institute. Kristen, it's great to speak with you down here on the floor of the stock exchange.
It's great to be here, Kristen.
My first question is, how are you finding that Solana is really ensuring the future financial infrastructure?
Yeah, well, it's interesting. We just saw the market close here. I think the markets of the future are going to be 24/7, and so I'm glad I got to witness this historic time because it won't always be here. But, listen, Solana is a super fast network with really affordable fees, and we think it's going to be the foundation for the markets. But what's interesting is right now we're seeing Solana is being looked at as an investment opportunity. And we have a couple of different categories out there. Obviously, you can go buy the asset itself, but we're seeing the emergence of digital asset treasury companies. And soon, hopefully, when the government opens back up, we'll finally have the Solana ETFs approved. And so it's a really great opportunity for investors, but it's also a great opportunity for Wall Street that is looking at this technology to upgrade the way that they trade equities.
Yeah, we hear a lot about Solana these days down here on the floor of the stock exchange. What new ways are investors getting exposure to Solana?
Yeah, so it's really through the DATs. That's the first option, because owning crypto is not for everyone. You have to there's extra steps, right? You have to go and you have to have an account, you have to buy it with dollars. With the digital asset treasuries, that's a way to get exposure to teams that aren't just holding the asset on your behalf, they're utilizing that asset within the Solana network, which creates yield. And then the ETFs, I think, are another huge opportunity. We have Bitcoin and Ethereum ETFs today, but fortunately the SEC has brought some new generic listing standards to bear, and we just need the government to open up so the SEC can finally approve the applications. But hopefully that'll happen in the next couple days, and we'll see those products available sometime this month.
We are following that closely. It does seem as if investors are betting, traders if you will, that the government will reopen based on some of the levels that we see here today. Kristen, how important is the SEC's new path for some of these sole ETPs?
Yeah, it's a critical step. I worked on Capitol Hill for 10 years, and I've been in Washington, D.C. for about 25 years now, and I've been through a lot of shutdowns. The government will come back, it will open, it's just a matter of time. But, you know, at the SEC right now, only 9% of employees are allowed to work. So that other 91% are not allowed to log on to their computers or utilize their email until the funding is restored. And so it makes it difficult, particularly when we're in this process where issuers are going back and forth with the SEC, they're making modifications to their applications. All of that is on hold. Moreover, the SEC has been doing a lot on the regulatory front with their Project Crypto, and all of that work comes to a standstill. So certainly a setback, but I do think the SEC is very committed and very hardworking, and as soon as the shutdown is over, they'll be back to work, and we'll see ETPs approved and all the other good work that they're doing.
We'll be watching that indeed. Kristen, why does SEC and CFTC coordination matter for the path forward for crypto?
Oh, it's huge. It is, you know, two market regulators, two different committees of jurisdiction. It's very difficult to get them on the same page, but this week they held a joint roundtable together, the first time since the implementation of Dodd-Frank 14 years ago. So they're talking and they're trying to figure out the right way to provide guidance that's consistent across the two agencies. And that way we will be able to have commodity derivatives, commodities, and securities all trade in one place. So I think it's super exciting, and it'll provide more choices for investors.
It's so fascinating, Kristen. Anything more you can share with us and our viewers here today?
Yeah, well, listen, I think this shutdown is a minor setback, but I think Congress is at work, and I think that we're going to see a lot of good things happening for Solana. You know, both coming out of the SEC, but also with some of the legislation that Congress is working on. So it's a busy time in Washington, but we're getting work done.
All right, joining us from Washington, Kristen, thank you so much for joining. Kristen Smith, of course, president of Solana Policy Institute. And after the break, everyone, the latest in startups raises and rounds, plus an interview, of course, a taped interview, in fact, from Scarlett Sieber of Money 2020. Stay with us. Welcome back to Taking Stock, everyone. I'm Kristen Scholler, down here on the floor of the stock exchange. We are at the Cheddar set, and today in Startups Raises and Rounds, first up, AI data analytics startup Data IQ has hired banks, including Morgan Stanley and Citigroup, to prepare for a U.S. IPO as early as 2026. Next up, Swedish self-driving truck startup Einride has raised $100 million to scale their autonomous freight operations. And last but not least, Better Tomorrow Ventures has closed a new $140 million fund, signaling continued confidence in fintech investments. All right, well, last week our own JD Durkin caught up with Interplant CEO Shelly Aronov during Climate Week to talk about the innovative way that they are turning plants into living sensors. Let's take a look.
Shelly Aronov is the CEO of Interplant, taking time out of a busy schedule, without a doubt, to join us for a one-on-one interview here on the trading floor of the New York Stock Exchange to talk all about Interplant's pioneering seed technology. Thanks a lot for joining us.
Happy to be here. Thank you.
Let's start with an introduction, not just to the company, but really your core product, your core work that you do at Interplant.
Sure. So at Interplant, we engineer crops to signal when they're stressed, specifically by important stresses to farmers like fungal pressure or insect, or if they don't have enough nitrogen. And the idea is by the time we actually find a problem today, it's already too late. The damage happened. We need to turn back the clock and find it very early. So we tap into the plant's molecular reaction to the stress, which starts within hours, and then we teach it how to signal optically when it's attacked. So the idea is plants are living their life, growing, but when they're infected by fungus, we get an optical signal that we can see anywhere from space down to equipment, and it comes weeks before the damage happens and the symptoms show up. So you have actual time to treat the plants and increase yields.
I love talking with, in the world of Wall Street, entrepreneurs and business founders about their own personal journey. What was your personal journey that led you to the work with Interplant?
This is my third company, so I think that's probably what I was meant to do in life. I went to Stanford Business School. It's what brought me to the US. But my previous company, my second one, it was a small business. It was a hummus brand, growing slowly, selling in supermarkets in the West Coast. And it was my moment, 4.5 years into it. I thought, this is not for me. I don't want to build something small. I want to do something really impactful and big. And that was the beginning of Interplant. So starting this company was really all about scale and impact.
How does your seed tech allow farmers to see, sort of visualize stress within their crops?
We do the visualization for them, in a sense. You don't have to go out and scout or anything like that, because farming of soy and corn in the US, we're talking hundreds of millions of acres, quite a lot of crop. So the way it works is you just plant the seeds, and then when the signal is there, we can collect it from satellites, we can collect it from the equipment that goes through the field, through drones, then is provided to the farmers either through text messages or through their operating systems that they use. They can then see it on their fields. So they know these are the fields that are impacted with fungal pressure. This is where I should go and apply fungicides. And then at the same time, these are the fields that are healthy, and those could be left alone.
I know that Interplant has made the world's first real-time detection of fungal infection in soybeans. What does this pivotal moment mean for you, and what should people know about it?
Right, so this year, since it was our first commercial year, was also the first time ever in the history of farming where farmers were alerted as soon as a plant was infected with fungus. And it happened actually in July 19th in Nebraska, where we saw a signal for white mold, and we're able to tell our farmers, which gave them a few weeks in order to take care of the problem and go out and apply fungicides that could treat white mold. By mid-August is when the symptoms show up, and we know that we had about a 3.5 week head start on that disease. And when you see the symptoms, it's already too late. So this is kind of the beauty. You can actually go out and treat it and then prevent that yield loss.
Shelly Aronov, CEO of Interplant, joined us here at the New York Stock Exchange. Shelly, thank you so much.
Thank you.
Hello, I'm Scarlett Sieber from Money 2020, and on today's segment of Hindsight 2020, we rewind the clock back by 2 years. On August 24th, 2023, Better.com, the digital mortgage platform with big dreams and an even bigger name, officially went public. They did it via a SPAC merger. Think of a SPAC like a blank check company. It's a shell that goes public first, raises a pile of cash, and then merges with a private company to take that company public. It's basically a shortcut to the stock market, skipping the long traditional IPO process. If an IPO is like building your own fancy house from scratch, a SPAC is like moving into a house someone else already built and just repainting the walls with your company's name. SPACs were all the rage back in the early 2020s, if that's even a thing. In 2021, SPACs peaked with 613 IPOs, making up a whopping 63% of all US IPOs that year. Back to Better. This SPAC stepped onto the floor under the ticker BETR, as in Better, which is a confident choice in an industry that usually plays it safe with names like First National Consolidated Lending of America. This deal brought in $556 million capital boost, including a $528 million convertible note. That's a serious stack of cash for scaling, expanding their products, and maybe making the mortgage process slightly less soul-crushing. If you have been there, you know what I'm talking about. Let's go back to day one. We got to talk about this. The stock price took a steep drop, over 90% in early trading. Headlines called it grim and painful. But here's the thing, Better.com wasn't built for one day. It was built for the long game. By the time they hit the public markets, they'd already cut operating expenses by 80% year over year, streamlining operations, focusing on tech-first solutions that the industry did not see coming at the time, like the one-day mortgage, and setting themselves up for what growth looked like when the housing market rebounded. First half of 2023 revenue came in at $51 million. Yes, they posted losses, $135 million net and $82.8 million adjusted EBITDA, but that's before the IPO war chest and the leaner business model could kick into high gear. So if you judged August 24th only by the stock chart, you might think this was the end of the story. But zoom out and it looks much more like chapter one of a comeback. Because here's the thing about the mortgage market, it's cyclical. It always comes back. And now Better.com's got the tech, the team, and the capital to ride that rebound. August 24th, 2023, Better.com takes the leap. A rocky landing, sure, but sometimes the best business stories start with a plot twist. And when your ticker says BETR or Better, you're basically daring the market to bet against you. Do you have any questions about the Better business model or have an iconic date in history that you want to see profiled with us? Drop it in the comments below.
Welcome back, everyone, to Taking Stock. We're down here on the floor of the New York Stock Exchange. Stocks did close fractionally higher in today's session despite the government shutdown. Treasury Secretary Scott Bessent told CNBC earlier that GDP growth might be impacted as a result of the shutdown. And we know that the September jobs report, in fact, is not going to come out on Friday because the government is now shut down. Bettors are anticipating that with this shutdown, it cements the path forward for rate cuts by the Federal Reserve. Of course, the jobs market and inflation are the Fed's dual mandate. Well, a big day today because private company OpenAI is in focus, getting a valuation of $500 billion. That's pretty impressive. We covered it on the show today. We'll have more action tomorrow down here on the floor. You can watch NYSE Live tomorrow morning at 9 a.m. Eastern. I'll be back on the show, counting you down to the market open and telling you everything that you need to know on cricket because the National Cricket League will be here. We'll see you tomorrow morning here on the floor of the Stock Exchange. That's going to do it for today's Taking Stock. Have a wonderful evening.